So, welcome to this week's Armchair Trader podcast. We're talking about cryptocurrencies again this week, but more specifically, some of the problems that can arise as a result of trading or investing in crypto assets. And on the podcast today, we have Chris and Charlie Brooks of Crypto Asset Recovery, all the way from the US. Welcome to the podcast, guys.
Stuart, thank you very much for having us.
Yeah, thanks. We're excited.
So to start off with, Crypto Asset Recovery, I guess the name is, the giveaway is kind of in the name of the company, but can you give us a quick rundown of what you guys do?
If you have purchased Bitcoin or Ethereum or another cryptocurrency, and you're storing it in what's called a self-custody wallet, and you lose your password, there's no password reset button. All right, these are decentralized technologies. And there are many people that have what is today hundreds of thousands, millions of pounds, euros, dollars worth of assets that are trapped in wallets for which they have forgotten the passwords. So that's the simplest case for what we do, is that we work with those clients and we try to crack the passwords on those wallets so that they can get access to those assets.
Is this the most common way people lose access to these cryptocurrencies? They just have a wallet and they just basically forget the password, and it's not like a normal password where most other services we use. There's with a bank account, there's a way to get your password or reset your password. The security here we're talking about is so top grade that if you lose that password, that's it. You've lost access to those cryptocurrencies.
It is one of the most common ways that people lose their cryptocurrencies. Of course, in 2021 with the bull run, we saw scams and theft just hockey stick. And so that also plays a large role in how people lose their funds. But I mean, if you think, over the last year about the number of times when logging in, you had to click that password reset button and go through email verification, it just goes to show how prevalent this issue is. And you're right, because of the security measures in the Bitcoin protocol and the use of these non-custodial wallets, meaning that there's no exchange or governance body controlling your private keys. That does mean that if you do lose your private keys or your password to control those private keys, you need to approach a company like ours to help you recover them.
So we've been led to believe, from some of the coverage we've done on cryptocurrencies, we've been led to believe that if you lose these passwords, that's it. You're done. You'll never get access to these assets ever again. And we ran an article on the website quite recently looking at some of the biggest accounts where people have lost their password. And we are talking here about some very substantial fortunes, even at today's cryptocurrency prices. This is millions and millions and millions of dollars that there are people who are entitled to these assets, but because of the fact they've lost their password, they can't get them. Is that really the case, or are you holding out hope for people who are sitting there wondering how they'll get access to some of this stuff?
In some cases, it is absolutely possible to recover passwords. Typically you need two things. Okay, the first is that you need some kind of wallet backup, which is essentially just an encrypted version of your private key. All right, just as a refresher for your listeners, a cryptocurrency wallet doesn't actually hold the funds. What it does is it holds the private key that allows you to sign transactions on the blockchain. Okay, and so a wallet backup, it varies. What format that takes varies a little bit from wallet to wallet, but most wallets provide some mechanism for storing a backup in case you lose you lose the hard drive on which the software is stored, or a service goes down or something like that. So first you need a wallet backup. And the second thing you need is some good guesses as to what your password was. Typically, we are all creatures of habit when it comes to building passwords. And so if you think back on 5 years ago, you could probably come up with a list of passwords you might have used. Like, I might have used the password secret42. I use that for a bunch of services. Okay. And so what we can essentially do is once we find a copy of your wallet backup, we can sit down with our clients and sort of talk through, How is it that you have created passwords in the past? Did you use family member names, the names of your pets? Did you like to put numbers on it? Were there symbols that you used? And then what we can do is create millions of variations of those passwords that you used. We can create, in some cases, billions, and for some certain wallets, we can actually run trillions of variations of passwords against that wallet backup until we find the right password that decrypts that wallet backup in a predictable way so that we know, aha, this is the password that was used to initially encrypt this wallet. And once you do that, then you have access to your funds again.
Are there issues where you have only a limited number of opportunities to get your password back before the whole thing gets deleted and that's it? It's all over.
There are certain instances in which that could be a factor. So, of course, there was that story of, a gentleman who used, I believe it was the Iron Key wallet, and right. He had, 7,000. He had 7,000 Bitcoin and just a few passwords left before the device wiped itself. And then more commonly, there are cases with Trezor and Ledger hardware devices where you can set a PIN, and if you enter that PIN incorrectly, I want to say 4 times in a row,
3 or 4. Yeah.
Don't quote me on that. It wipes the device actually, and now by wiping the device, that does not mean it deletes your Bitcoin, because of course there is no way to delete Bitcoin off of the public ledger that is the Bitcoin network. But what it does, it deletes your encrypted private keys off of that hardware device, making it substantially harder to recover those funds. So,
and by substantially, like heat death of the universe hard.
Right. And and so generally speaking, when we have clients who come to us with cases like that, oftentimes, unfortunately, we can't help them. But when we can, in instances we can, it oftentimes comes down to a hardware recovery, and we tell them, don't touch the device. Don't try and enter any more passwords or any more pins. Leave it alone and let a professional poke at it with a stick from 6 feet away.
And one thing we also hear a lot about is obviously big hacks happening, people losing their crypto because that's being stolen as well. How big an issue is that really, or is it really more a case that 9 times out of 10 you're talking to people who've just lost their password? But do you also deal with people who have legitimately had crypto assets stolen?
The issue of scams is a very real issue today. And so there are kind of 2 issues here. One is that you get scammed out of your funds, right? So that's often a social engineering. It's almost always a social engineering case, right? Where you get introduced to an acquaintance. That person tells you they can, you should invest in Bitcoin through this platform. You put some funds on that platform. It looks like you're making crazy money. So they encourage you to put more funds onto the platform. And then at some point they say, okay, well now, we're just keeping your money. Or, hey, we'll give it back, but pay 20% up front, which is really just a scam to get you to invest another 20%. And you'll never see your money again. Scams did a hockey stick in 2021. So the number of scams just went up and to the right at a crazy pace. The second issue is theft. And a lot of times that gets kind of conflated with scams. So people will often say, hey, I've had Bitcoin stolen from me. And I would say, well, you were misled, you were tricked, and then you sent Bitcoin to someone. So I want to draw a distinction between thefts that are social engineering thefts like that, where you've been tricked or scammed out of your funds, and thefts where someone has targeted an individual, figured out what their, where they store their Bitcoin, entered their place of business or their home and stolen Bitcoin from them in that way, or sort of guessed guessed that they had a wallet on a particular platform, guessed their password. Those happen. Those kinds of thefts happen, but they're relatively rare. So if you heard about like the Ronin sidechain thefts of a month or 2 ago, where 5 wallets were emptied of hundreds of millions of dollars worth of Ronin and ETH and that kind of thing, that was a theft of funds, probably by a nation state, probably by North Korea. However, if you're an average investor and you have purchased $10,000 worth of Bitcoin, the odds that someone's going to target you and actually like sneak into your house to steal your Bitcoin, or that they're going to be capable of reverse engineering your password they're capable of both getting a copy of your wallet backup and reverse engineering your password, that risk is very low. The risk you want to pay attention to is, do I trust the platform that I've sent my funds to trade with? Like, is that a credible platform, or is that platform actually just a scam platform? That I think is the most common risk, that security risk that people face with their crypto.
And how easy is it to trace stolen crypto? Because we read in the news sometimes about how some assets are actually have been recovered. It sounds to me like it's frequently involves fairly sophisticated law enforcement operations where there's a big sum involved. But if it's small, like I've lost $10,000 worth of Bitcoin has been stolen, does the blockchain actually allow you to track those kinds of assets down in a way that wouldn't be possible if it was, say, $10,000 worth of U.S. banknotes, for example?
Right, it absolutely does. And so this is a common misnomer that we get around our business, is that we are a blockchain analytics company that traces transactions and deals with stolen or lost cryptocurrencies. We are not, unfortunately. But um, depending on wallet size, there are companies out there who are blockchain analytics companies who will actually attempt to track down your funds for you, and so they have very sophisticated processes on the back end that will walk the blockchain, and they can even sort through what are called mixers, which is a way you can send Bitcoin or your cryptocurrency through these complex transactions to make it essentially untraceable. Now these they can become traceable through really intense analytics, but it does at the end of the day come down to getting a good analytics company to work behind you, and then collaborating with law enforcement if those funds ever do land on any sort of exchange, such as a Coinbase, a Kraken, a Gemini, where they could be frozen and then returned to their rightful owner.
Let's say the scammer was completely unsophisticated. Okay, it's very easy, for example, to trace to the point that the funds are sent to like a custodial exchange, like Coinbase, something like that. The problem is, then even a moderately sophisticated scammer will move the funds immediately out of that. So what happens is the funds go into the custodial wallet, right? These custodial wallets are much more akin to a traditional bank, right? Where that single custodial wallet might have funds from thousands of individuals. Okay, and the custodial exchange simply has a database. So they say, okay, this Bitcoin comes from Stuart. This Bitcoin comes from Charlie. Okay, but both of those Bitcoin are contained within the same wallet. So once a scammer moves the funds into one of those custodial wallets, you can watch it go in, but then you have no idea from just analyzing the blockchain. As you see transactions leave that wallet, you have no idea whose transaction that was or whose Bitcoin it was. This is analogous to the mixer situation, except mixers tend to have fewer people's tokens mixed, which is why it can be easier to sort of trace transactions coming out of some mixers. So when people have been scammed, what you can do is try to trace the transactions. What's really difficult is to recover the transactions. Okay, so the case where it can happen is you have this completely unsophisticated scammer that simply sends the transactions to Coinbase and leaves it in their account for which they've done KYC, or know your customer, right? Where they've given a driver's license, for example. In that case, you can trace the transaction to Coinbase. You can get law enforcement involved. Law enforcement can subpoena Coinbase, and Coinbase can then seize the funds. The problem is that might have worked in 2016. It is unlikely to work in 2022, just because as everyone in the space has gotten more sophisticated, unfortunately, so have the criminals. And so I don't like to hold out a lot of hope that people whose funds have been scammed are going to have an opportunity to retrieve those funds, especially if it's a small amount. It's going to be very hard, I think, to get law enforcement engaged over $10,000, like you mentioned. And the exchanges probably don't have the legal right to freeze those funds without law enforcement involvement.
And what about this? We ran an article quite recently, actually. I think it was last week, about the large number of cryptocurrency wallets where early stage investors in a particular currency have bought into it, and it's now worth millions and millions and millions of bucks, and they've never touched it. I mean, who are these people, and is it how easy is it for someone to identify? I mean, they might even own this stuff and not even be aware of it, or their father owned it and they're not even aware of it. I mean, what happens to all that stuff?
So I believe you're referring to the Ethereum presale, which was a literal sale of Ethereum. So in July of 2014, you could trade one Bitcoin for 2,000 Ethereum. And we find this topic very interesting because we have had a few clients come to us with Ethereum presale wallets. And we always like to conduct some analytics on interesting stories of lost assets in this niche. And so upon digging a little bit into the Genesis block, so that's the first block that was minted on the Ethereum blockchain, we found that around 7% of those addresses have never transacted their Ethereum since it was received in 2014. And so right now that represents about $1.2 billion at current market prices. And so the steps that we are recommending to people to go out and find and figure out, do I have a slice of this pie, is when you signed up for the Ethereum presale, you would enter an email and send a Bitcoin and your name. And then they would email you a JSON file, so a file with the extension .json, and that represented your encrypted private keys for your Ethereum wallet. And so there have been plenty of people who have found these wallets and ended up recovering their funds. There are people who found these wallets and have never recovered their funds. But if you can go through your email and find an email from the Ethereum presale containing this JSON file, approaching a company like Cryptoasset Recovery, you'll at least have a shot of going through and finding the password that did control your funds, which may very well be worthwhile, because if you look through the 630 addresses that have never moved, the average wallet value is actually 845 ETH, which is a little bit over $2 million right now. So, worth your time to go digging on.
Yeah, I still find that completely incredible.
The reason we get excited about these addresses where funds have never moved is we think it's very unlikely that someone's just holding or hodling these funds over an 8-year period when an Ethereum has gone from about US 30 cents to US up to, it was almost $5,000 at its peak. So it's very unlikely that anyone voluntarily simply held from 33 cents to $5,000. So what probably has happened is that they've either lost access to the wallet backup, perhaps they didn't want to be tracked, so they entered a false email address during the Ethereum presale. You had two ways to get that wallet backup. One was you could enter an email address and they would email it to you, and one was that you could download it and save it to your hard drive. The Ethereum Foundation was trying to be very careful in making sure people had access to these wallets. But if people used a false email address because they didn't want to be tracked or something like that, and they, their hard drive died or they never saved that wallet file, then they're out of luck at that point. If you can't get the encrypted private key, it doesn't matter if you know the exact password, because it won't do you any good without the unencrypted version of the private key. Right. So what we think happened is either they just lost their wallet entirely, or they have that wallet backup, that JSON file that Charlie was talking about, but they don't know the password anymore. And so that's where we come in and we work with them to try to either brute force that password or guess, do sort of a crafted brute force based on the kinds of passwords they created at the time.
Do you ever get involved in any disputes over crypto? For example, a common one I've heard of is where a couple's getting divorced, and one team of lawyers believes that the other individual might have huge amounts of crypto salted away that they haven't disclosed, and they want to try and find out what their real net worth is if they include the crypto assets. Is that something that comes up from time to time?
It does. We had a case last year where a woman came to us and she said, I'm going through divorce. Exactly the scenario you're suggesting. My husband didn't tell the court about all this ETH, and I actually found the ETH wallet on my Ethereum wallet on my computer. Like, he had stored it on my computer. Can you just go in and crack it? The problem in that case is that we really need the court's permission to access those funds. So we are happy to work with clients as long as they have gone to the divorce court and the court has said, okay, crypto asset recovery, the password has been lost. You have permission to go crack it. But, we could actually be accused of theft in that case if we just cracked the wallet and handed it off to the spouse and there's been no determination of who actually owns those funds. So we won't touch those cases without court involvement. There's kind of an analogous case, which are probate cases. So when someone's spouse or child or partner has died and they had purchased, invested in crypto in the past, and we get those several times a month, we get those cases. So we have to go through a similar process where we need to have a contract with the person that's managing the estate, the executor of the estate, and we have to see a death certificate and we have to verify the identity of the person. But in those cases, we can often recover funds, although it depends on, there is a pending crisis, right, among people that invested in crypto, but they didn't inform their loved ones about how to recover that crypto. So the loved ones may not know how to even get started. And while we can work with them, it's so important if you own crypto that you have a plan for what happens if you walk out the door and have an encounter with a bus, shall we say. So it's just really important to talk to the people that that you want to have access to your funds, like you would if you had a retirement account somewhere.
Do you think that regulation? I mean, there's a lot of discussion going on about regulation of crypto, and it's we identified it as one of the big sort of trends in the market for this year. Do you think that's going to change anything in terms of ease of use for cryptocurrency markets if regulators get more involved and try to bring it all sort of inside the fence, so to speak?
Regulation's a really interesting topic right now. I think just to address your last question there of ease of use, I do not believe that regulation is going to increase ease of use. I think it's going to add some stumbling blocks and some barriers at the beginning during the KYC and integration process there. Now, on the flip side of that, I think that regulation is sorely needed. Okay, so we are coming right now off of the tail ends of the UST Terra Luna crumble.
Debacle.
Okay, where we saw a stable coin, which is a cryptocurrency that is supposed to be pegged at the US dollar, at $1, where we saw a stable coin with, I believe it was $16 billion in market cap, just tumble off a cliff and lose its peg by 85% now. So the issue there is that those $16 billion were sitting in reserves in cash, in supposed cash in UST, for safekeeping to avoid market volatility. And all of those investors ended up finding themselves in one of the most volatile markets they possibly could have. And so the proposed regulation right now is strongly centered around stablecoins, which is very timely considering the Terra crash. I do believe, we are of the belief that regulation does need to come into the space in a major way to increase public adoption, because, as you see more institutions wanting to come into play, as you see pension funds that want to come in and invest their money into Bitcoin and elsewhere, it significantly makes those institutions, it lowers the barrier of entry for those institutions to come in if it is regulated by national bodies.
Yeah, and I think we strongly support the importance of regulation, knowing your customers. I think the increase in regulation, for example, after 2017 with all the ICOs, that many of which were just complete. So ICOs were initial coin offerings. It was sort of the way that new tokens were released. It's very similar to the Ethereum presale we talked about earlier, where people are allowed to buy tokens at a discount, and then the funds that they trade for those tokens are then used to actually build the blockchain and continue to develop that currency. During 2017, there were some wonderful tokens that got established, and then there were just a host of complete and utter scams that were set up to just fleece investors of their money. And so the more regulation that comes in to manage those kinds of scams, I think that's healthy for the ecosystem. I am not confident that the kinds of scams where someone's like, hey, come put your Bitcoin into our exchange and they just steal your funds, I don't see how regulation is going to have much of an effect on that, right? These are companies typically established outside of the US or the UK in places where the government has said, as long as you're not targeting our nationals, we don't really care what happens, right, in terms of scams. And so I don't see regulations being incredibly effective there. I think it's really a matter of education, right? There needs to be a flight towards the most credible trading institutions when you're buying and selling crypto. And so you need to do your due diligence and understand, like, if I'm going to send $10,000 somewhere to supposedly invest in Bitcoin, is it actually an institution that has backing and is following the regulations and laws within its country and that sort of thing? So regulation's great. It's not going to be a panacea that solves every problem in this space.
You've mentioned one best practice, which is obviously make sure that other members of your family know that you actually have a crypto wallet and where to find the password. What other best practices can you recommend for people who are either actively involved in crypto already or are thinking of getting into it?
We have a few really basic best practices actually that can reduce your risks of losing access to your funds drastically. So the first one, and the newer of the two that I'm going to mention, is complete KYC on any exchanges that you have funds on. So coming off the heels of talking about regulation, know your customer or KYC regulations are becoming much bigger, and they are coming down the pipeline in later 2022 and 2023. And this could mean that if you have Bitcoin sitting on a Coinbase or a Kraken, and you have not completed a KYC process, that by later in 2022 or 2023, you may very well not be able to access your funds legally. So that's the first, and it's very basic, and you're going to be prompted to do so upon signing up regardless.
And it's just to give a flavor for that. Like, typically what you have to do is take your driver's license or your passport, scan it, and send it to the exchange where they're going to verify that you are who you say you are. That's essentially what KYC means. Know your customer. You already said that.
Right. And then the second one is more on the non-custodial side of things. Okay, so if you don't have your funds in a Coinbase or a Gemini or a Kraken, and instead you host it on a non-custodial wallet such as a MetaMask or a Bitcoin Core or a Dogecoin Core, in these cases, there's no body with which you can go to reset your password. And so the bottom line comes down to storing your seed phrase, your private key, and your password in a secure location. And so it would be awesome if we all had industrial military grade safes at home that we could lock up our secret words in. But for most people, that's unrealistic. And so what we recommend to clients is that they buy, a $30 safe off Amazon. It's nothing that's going to stop a robber from walking in, taking it, and leaving. But it's a place where every time you record a seed phrase or you write down a password, you slip it inside that safe. And so when spring cleaning comes or when you do end up moving houses, you know that this safe, this contains all of my private keys, all of my important financial information that I need to keep safe. As opposed to storing it in just a stack of papers on your desk where you're going to end up shredding it or throwing it out eventually.
It's one of this issue of moving houses we hear every week from someone. They're like, yeah, I wrote to these recovery phrases Charlie mentioned. They're 12 or 24 word phrases that this is when we talked about hardware wallets earlier. This is like if you enter your PIN incorrectly too many times and the hardware wallet gets wiped, the only way, well, there are two ways, but the most practical way to recover your funds is you have a 24-word seed phrase that can actually regenerate the private key that manages your wallet. Okay, so every week we get stories of people that are like, yeah, I know I wrote it down and I left it on my desk, and then we moved houses a year later, and then as I was cleaning everything up, it just gets lost. So that's where the recommendation for this safe comes from. Nobody is going to look at a safe, no spouse, no person coming in to clean your house is going to look at a safe and think, oh, nothing in there matters, right? I'm just going to open that up, empty it out into the trash and move along, right? By putting things in a safe, you have marked them as important and valuable. And so we think that can be a really simple life hack to manage probably 80% of the risks of losing access to your wallet.
Yeah, that sounds like very practical advice. if someone's interested in contacting you guys and they have an issue with their password, they can't recover their crypto, how can they get in touch with you?
They can find us at cryptoassetrecovery.com. We have a contact form. They can fill out all their wallet details, nothing confidential, and submit it to us, and we'll get back to them within the day, ideally within an hour.
Fantastic. Well, thank you very much indeed, guys, for coming on the podcast today. That's been really enlightening, and I really appreciate it.
Thank you very much for having us.
Yeah, it's our pleasure. Thank you, Stuart.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.